All right, guys, are you ready? Let's kick it off. Let's go with what we have today. Okay, good day, guys. I welcome you to another episode of Technical Analysis. Today is Monday, being 17th of February. I still remember my humble self, Michael. So, in today's video, we're gonna be talking about key levels, market structure, chart patterns, and the rest of it. Okay, we're going to be talking about three main things: market structure, key levels, and chart patterns. Okay, so these three structure, or these three key important facts, determines what happens in the market. So we're going to be looking at each and every one of them, and we will explain it in detail. In case if you have not subscribed to our channel, go to our channel SM Trend FX, and you'll see a lot of videos that we did. This one, we posted this one 10 days ago, how to start trading in 2025, basic things you need to know. Then this is, you can see the live trade. When we did live trading, what happens, and psychological level we discussed, and how to manage risks effectively. So we'll be talking about that in today's video, but we're not gonna emphasize much on it. So my purpose of this video today, we're supposed to do this discussion yesterday, being Sunday, because in forex trading happens 5 days in a week. We have 7 days in a week, which is Monday to Sunday. So exception of Saturday and Sunday, there is no trade. Market this thing we close. So stock exchange markets will close, and a lot of forex exchange markets will close as well. So to reopen on Monday, 12 p.m. Nigerian time, 12 a.m. 12 a.m. midnight Nigerian time. So in today's video, we're gonna be specifically based on, we'll actually analyze one page today. So maybe later we can still do more pages. So we'll actually analyze one page, and that page is called GBPJPY. That is British pounds versus Japanese yen. So this is my chart on British pounds versus Japanese yen. So what we'll be looking at is, when we talk about market structure, we talk about what plays in the market. We talk about how the movement of the market goes. Is it going upward, or is it going downward, or is it going sideways? So we have three types of market structure: the upward market structure, the downward market structure, and the sideways market structure. You can see these three market structure in a chart on daily basis. Then when we talk about market structure, we talk about time frames of this market structure, because you can't talk about market structure without considering the time frame. So we have different time frames. If you look at this up here, you will see I'm on a 1 week time frame. You can go as far as 1 month, 1 year, depending on the type of trader you are. Okay, so the people that are called swing traders basically stays on monthly time frame, and monthly time frame and weekly time frame. These are people that trade huge amount of money. When I mean huge amount of money, millions of dollars at once. So you can compare them with you that is trading maybe $20 or $100 or $1,000 or thereabout. You can compare their trades with your entry. Okay, so and basically, actually, they are the people that moves the market. Okay, they are the people that have much power in the trading world. Whatever you are trading, be it crypto, be it indices, be it forex trading, be it commodity, be it stock as long as you know these three things, your psychological aspect is sound. When it comes to trading, you know how to manage money, you know how to take your risks, you know how to manage your risks. You don't put all the eggs in one basket. No, you have to split your your money in order to get chances. Okay, in order to create more chances for you, you don't put all your equity or all your margin at once. That's why some people blow the account all the time, because they go as far as putting all their margin at the same time. And when this thing happens, they have two chances: possibility of winning or possibility of losing everything. Okay, so but I want to tell you one thing. Just like one of the book I read, it says a disciplined trader, that everyday compounding that you do with a minimal loss, you manage your loss, you put your stop loss. Everyday compounding, whether you're getting to $2 or whether you're getting $5, will actually give you, if you calculate the percentage in 1 year to come, you will see that you're making a huge amount of money. So you trade with patience. It also says that in a man, there is a loser in you and there is a winner in you. There are two type of effects that happens in a man, in psychology of a man: winning and losing. And the most interesting thing about this is that we as human beings, when it comes to money, we always exercise the losing attitude in us first instead of the winning attitude. That's why that whenever you tell somebody about a good idea, the person will say this thing can't work. Okay, first of all, he or she has used negative affirmation to declare that thing can't work, and in his mind or in her mind, he will never do that thing again, because he has inculcated negative vibes into him. So that it also plays important role when it comes to trading. So you have to see trading as a business. Don't see it as a gambling. If you want to win, if you want to become a professional, and you must be learning, stop jumping from one pace to another. Master one particular pace. If you're a gold trader, SAUSD, if you're trading gold, make sure you basically master the gold chart. Watch gold chart every day. Learn the reason why we have reversals, the reason why we have uptrend, the reason why we have breakout or breakout structure. Master all those things. You always need to ask yourself, why are people taking profit at some point? Why are people putting stop loss at some point? Okay, so these are the questions you need to ask yourself before you become a profitable trader. So, but in the aspect of market structure, that is what I'm trying to explain. So when you open your chart every day, the reason why I'm on 1 week time frame is because I want to analyze what happened last week. Okay, so is what happened last week that you can use to make your decision this week. Today is Monday, and I don't like putting my trades on Monday. I like entering the market on Tuesday, from Tuesday and other days as well. So it's better you trade once in a week and make profit than trading every day and losing. So first of all, let's start with 1 week time frame. Let's look at overall market structure of this 1 week time frame. If you look at this point, you will notice that we have a clear uptrend here. Okay, that is market structure for you for 1 week time frame. 1 week, this candlestick represents 1 week. Don't just, because one of the mistakes we used to make all the time is because when we look at the chart, we think that a chunk of all this candlestick is in 1 week. No, when you go to 1 week time frame, it means that each particular candlestick, each particular one, this one is 1 week, this one is also 1 week. Each particular one represents a whole of 1 week. Each of these candles represents a whole of 1 week. So if you notice, if I count all of these candlesticks, you see that we are currently in more than 1 year or more than maybe 6 months or thereabout. Okay, so each of these candles represents one particular week, but you have to squeeze your chart. You have to squeeze your chart to see the overall market structure. What is the overall market structure here? The overall market structure, according to this pair, we are on GBPJPY, Japanese pound, and British pound versus Japanese what? Yen. So this is one of my favorite pairs. I like trading anything about British pounds. It moves well. I've been watching it. I've been observing it. So this is one of my favorite pairs, especially these British pounds, Japanese yen. So if you look at this market structure, what comes to your mind? What comes to your mind here is uptrend. It's just like climbing a staircase. This is like climbing a mountain. So if you look at this chart, the chart is going up. Now watch this place. You see that at times a lot of things happen all the time. Look at it. This area. Now watch. I will just show you this area repeated itself in another place. Now let's go. Let's see. You see this area? The same thing. The same thing. Almost the same thing. In fact, the same thing. Not even almost the same thing. Do you get the same thing as you are seeing it? Look at it here. All this chunk of candle. Look at the pattern here. Are you seeing different things from here to this point? We have a similar movement, and this similar movement, what does it mean? It can actually create another movement just like this. Can actually create another movement from here to this point. You see? So what I mean here is that it can create another movement maybe from here. That is continuation of the trend from here to up. Okay, so the problem here is for you to know where to enter perfectly, for you to know where to enter before it continues. Market cannot keep going up all the time. There would actually be a reversal point. That it means that the buyers cannot be in control forever. Okay, sometimes the sellers will also be in control, which we call the bearish market. You've heard about bullish market and the bearish market. So when we say bearish markets, we mean that the sellers are in big control. That means we are seeing a downward trend, massive downward selling pressure. That is what we call bearish market. So in this point, our market structure for this pair is uptrend in 1 week time frame. Now we want to analyze, because we are a day trader, the time frame that you'll be specifically stay on is the daily time frame, the 4 hours. Then you can take your entry on the 15 minutes or 5 minutes. So you do your top down analysis from the weekly time frame, the daily time frame, the 4 hour time frame, and the 15 minutes time frame. That is where you do your analysis. So let's go down to daily time frame. We've seen that on weekly time frame, we've seen that the market structure here is what we called uptrend. And we have, remember in the beginning of this video, I said that we're going to learn 3 things: the market structure, the key level, key zones, and candlestick patterns or chart patterns. So let me talk about the key levels. When we talk about key levels, you see this point where I marked. You see this point where I marked this line. Look at this point where I marked this line. If you look at this line now, what are you expecting here? What do you expect to happen here? I have already marked my key zone, because key zone helps in knowing where to enter the market and knowing where to exit. Okay, now the reason why I marked this area is because if you look at from here to here, you will see that this is the last touch. You see different touch. First touch, second touch. You can see my cursor. and third touch. Now this is the fourth touch. I'm expecting the fifth what touch. So what I'm expecting here is from here to this point. Before it starts pushing up again, it will reverse from here. So what I expect is, I'm expecting it to come down, then we enter and it will start pushing up. Okay, this is my analysis. That is the reason why I marked that area. You see, when I marked this area, it was here, then it touched it and started shoot up. It came down again, do this massive rejection and push up again. You see, so that is what we call key zones. You have to know your key levels, key zones, before you know where to enter the market. Your key zone helps you to know particularly where to enter the market. Okay, now another key zone, because when we talk about key zone, we talk about support and resistance. Key zones can be in support and resistance. When it comes in uptrend, key zones here represent support. This line represents support level. Okay, so I'm taking my buy on support level. Then here represents resistance level. Let me mark it like this. Here represent resistance level. Okay, just wait. Here represent resistance level. You see this upper part, the upper part represents resistance what level. So the resistance level also is also a part of key zone. Market tends to reject at resistance level, which in other words, we say that resistance that turns to support, which means, let me show you, this is the resistance that later turn to what support. This is the support. Sorry, let me delete this. This is the support here. You see, this is the support, and market rejected at that point. This is key zones. Okay, this is another support. What do you see? Markets rejected at that point. So it's either that this thing will take the former one out, and you look at this red line here. This is the last. Looking at this current movement, here to this point, looking at this current movement, you notice that there are three things we need to see here. There are three things. One is we have double top. You see double top. One, we have double top. Whenever you see double top on an uptrend, know that the market is about to change direction. Okay, so we have double top, and we have something like a neckline. Look at the neckline. We have something like a neckline. See it here. We have something like a neckline, and the market rejected from that neckline. In another words, you can actually say, I cannot call this thing head and shoulder pattern, because these two sides are equal. It cannot be head and shoulder, just like your head, your shoulder. So you have to have equal shoulder and your head, one shooting out. Okay, so this is not head and shoulder pattern, but the pattern of this chart is called double top. So double top is one of the clear indication that, oh, market is about to change directions. So what you need to do is just for you to wait for confirmation. And confirmation I'm talking about is for you to see a bullish candlestick. It's for you to see a bullish candlestick, which is this particular one right now. I'm looking at this particular one. I'm touching with my cursor. Is bullish, engulfing candlestick, not bullish engulfing candlestick. Here, you see, when you see engulfing candlestick means that there are big selling pressure at that moment. Okay, at that moment there are big selling pressure at that moment. So what you need to do is wait for the candle to close, and as you can see, the candle closed perfectly. And what happened? The candle closed perfectly, and what happened? This thing boost down. Okay, so some people might take profit at this point, then it goes up again. Okay, so that is how to know market structure. What's happening? That is how to know market structure. In case if you have any question, you can actually drop your comments on our WhatsApp group or on this comment section of this video. So did anybody have question? I don't think so. All right, let's continue now. Going further about chart pattern. So we've seen that in this chart, we have double top from the 1 week time frame. We have double top. Then from the double top, we have this breakout. Okay, this breakout here. Look at the breakout here. Look at the breakout here. Here, this particular one, this particular candle that breaks the previous low. We have the breakout. Then we also have another red candle that is coming down right now. Look at it. This red candle is actually coming to our direction. Look at it. This particular one, this particular red one, okay, is probably coming to our direction. Remember that I said that this chart, I'm doing this analysis on 1 week time frame, and every candle you see here represents 1 week. So the next analysis we're gonna do here will be on this particular candle. This is the beginning of the week for today, but we're not gonna do that. We're gonna do the last week, which is this black one. Okay, so the last week candlestick closed on what? On bullish markets. It closed what? On bullish. So this red one are bearish, these black ones are what? Bullish. So let's see this particular candle. Let's see what happens. Now we're gonna mark it. Okay, we use something and mark it. So let me do this. We use something and mark it. This particular one, this one. Perfect. Let me mark it very well so that you see it. This particular candle. What's going on? What's going on here? What's going on here? Yeah. Okay. I don't want this one to enter there. Okay. Sorry, let's just focus on this particular candle. Let's just focus on this one. Yeah, let's focus on it. We have, okay. Now let's go. We'll now go down to how many time frame? Okay, what time frame? We'll now go to daily time frame. Now I'll press day, 1 day, and press enter. So do you observe something? 1 week. How many candles are in 1 week? Now let's count. 1, 2, 3, 4, 5, 6, 7. You see? 1, 2, 3, 4, 5, 6, 7. Okay, this one is the starting point. Remember what I told you, that this one is the starting point. 1, 2, 3, 4, 5, 6, 7. So we have 7 candlestick here. Okay, making up to what? 1 week. So you see that within the space of this 1 week, we also have a bearish and we also have a bullish. So look at it. We have bearish candle, which is this 3 red candle, and we have bullish candle, which is this ones. Okay, so but the overall conclusion here on 1 week time frame is that it closed on what? On bullish. So let's see what happened on. I'll still keep this mark. Let's see what happened on daily, on 4 hours time frame. You notice that at this point, okay, what is our overall structure here? What is our overall structure here? Can you see our overall? Can you see that our overall structure is still uptrend? Is uptrend. You can see it's uptrend from this side, is downtrend from this side. We have consolidation from this side. Okay, we have consolidation at this area. Let me show you. We have consolidation at this area. Consolidation means ranging markets. This is the type of market structure we have. The uptrend, look at it. The uptrend from here to here goes up. Then the downtrend from here to here comes down. Then we have a little uptrend here. We have a little uptrend here. then we have consolidation at this edge. Okay, consolidation, two top, three buttons. Okay, before we finally have breakout of structure here. So these are the necessary things you need to know. Okay, these are the necessary things you need to know. So what we are looking at this moment now is where to enter the market. Where is the momentum of the market going? Okay, where is the momentum of the market going? Then we go down to 4 hours. We go down to 4 hours. Okay, we go down to 4 hours. Then on 4 hours, we actually see that, you see that mark, you see that the market is actually consolidating and is still coming down to the consolidation levels. Okay, so it's still coming down to consolidation level. So what we'll be looking at is this point, this area, because what you'll be looking at is recent trend, not the past trend. Okay, it's recent trend. That's what you'll be looking at. The recent trend is what you'll be looking at. So look at it. What is the recent trend? We have something like this. We have this area. Okay, we have this bottom, this last touch. Now we're waiting for this last touch to be taken out. Okay, then we have this movement, which is shows bearish what movement. So the overall of this thing on 4 hours time frame is bearish movement. So we are gonna be looking for a perfect position to do what? To enter our market, to enter our sell position. So as for me, I'm gonna target this end. What I will do is I'll put my short position at this point. Look at it. I'll put my short position, you see, put my stop loss above the previous high. Okay, then target the next one. You see the risk to reward ratio is 1:2, which is perfect. 1:2. Okay, the target is what? This. You're targeting how many percent? You're targeting how many percent? Almost 300 something. Okay, then you're you know, is double of what you are targeting. Risk to reward ratio. If your risk to reward ratio is not 1:2, 1:3, don't enter into that trade. If we use Fibonacci levels, where is our Fib level? If we use Fib level, you will understand that from here to this point, okay, from here to this point, you see we are on, you see we are on 0.5. so we are targeting this particular level. Okay, so that is my analysis today for you. I don't want to make this video to be long. So our GBPJPY is what? Currently on sale. As you can see, the market is going in our direction. Look at it very well. It's entering into our direction. So look at profit made 0.057 and it's still increasing. So that is my update with you today. I hope that this video resonated with you. Kindly do well to kindly subscribe and give us a thumbs up. Okay, thank you and have a nice day.